We are literally in one of the largest bubbles in the world. In fact, Canada and Australia are the only countries in the world where mortgage debt actually surpasses the entire GDP of the country. They don't look at the banks and say, why are you increasing your bonuses and laying people off? No, they go straight to the grocery stores. And it just shows you it's all about virtue signaling. Obviously, we know that with this government, they do not give a flying toss about the average person in the economy. They don't give a shit about the poor and the middle class people in this country. Banks are increasing their bonuses in Canada and they're also laying people off. What a great combination, I guess. I don't think so. But anyway, let's get right into this. It shows just how brutal these banks are and the fact that these CEOs just care about themselves, because considering how badly these banks have performed this year and what they've done with negative amortization, the fact that this is happening is unbelievable. So anyway, let's get into it. Banks bonuses climb 9% in Canada are odds with Bay Street Blues. Increases at all 6 banks despite broadly disappointing year for deal making. And disappointing year for their stocks also, when you think about it. Canada's largest banks set aside 9% more on average for bonuses in fiscal 2023 than it did a year earlier, with increases at all 6 companies despite a broadly disappointing year for deal making. And then basically it shows you how these have risen across the board. So National Bank, nothing. You've got CIBC that's increased it, looks like 2 or 3%. You've got BMO that has increased it over 10%. You've got Scotia nearly 5%. You've got RBC around 6-7%. And then you've got TD nearly 25%. I mean, this is just absolutely crazy considering the year TD has had. It's just unbelievable, isn't it? But this is what happens at these banks, and these banks are all laying people off. Just remember that. They're cutting jobs and then they're increasing bonuses. And this is exactly what has happened with these corporations, these large corporations across the country. Any large corporation, pretty much, the CEOs are sat there getting paid like 20x what the average worker gets paid. Jeremy Grantham calls this out a lot because he said like the increase in CEOs' pay compared to workers' pay has been one of the biggest injustices that we've seen over the past couple of decades, and it continues to happen right in front of our face. But the funny thing is, the government continues to go after the grocery store chains, who are just making increased margins because food prices have gone up because of inflation, but they don't question the banks. They don't look at the banks and say, why are you increasing your bonuses and laying people off? No, they go straight to the grocery stores, and it just shows you it's all about virtue signaling. Obviously, we know that with this government, they do not give a flying toss about the average person in the economy. They don't give a shit about the poor and the middle class people in this country. They only care about themselves. They are narcissists. And I believe all politicians are narcissists. It's just going to be incredible to see what happens. But I doubt anything is going to happen. I bet this is going to continue to go on. It's like whistling past a graveyard. That increase is somewhat at odds with the mood on Bay Street, according to Bill Vlad, managing partner and chief executive officer of Toronto-based recruitment firm Vlad & Co., who called the equities market of the past 6 months abysmal and said most people in the capital markets business have been bracing for much lower bonuses. And look, they're increasing it. And this is the year-over-year increase, by the way. So we're not talking about the amount of bonus they're getting. We're talking about the increase year-over-year that they're getting. So, TD nearly 25%. I mean, it's just absolutely crazy when you really think about it. These banks are literally robbing Peter to pay Paul. It's crazy that this goes on, like I said, though, and the government continues to focus on the grocery store chains, and obviously they do that for a reason. And then if you look at their earnings, you can see how the earnings have changed, and literally, TD's earnings are down. So their earnings actually shrank. They've been laying people off, and they're increasing bonuses the most. I mean, doesn't that just paint the picture of what businesses should be doing in a good economy? economy. I mean, it just shows how broken these institutions really are. These fucking banksters are crooks. They really are crooks. They are cheaters, liars, manipulators. You look at what these banks are doing and it just shows it right in broad daylight. Everybody can see what's going on. So kind of crazy, guys. I just find this nuts. So Scotiabank's income is down. RBC's the only one with their incomes up. BMO is down. CIBC is up slightly, and National Bank is pretty flat but down slightly. So you can see what's happened there with their income, and it's not a good thing really for the bank. Why would you expect them to be increasing bonuses? And then you've also got this going on, guys. Canadian banks prepare for shaky economy, more bad loans. And I want to show you this tweet from the car dealership guy on X. So auto loan delinquencies up 4x for Canadian lender. One of the larger auto loan companies here in Canada, CEO is a partner of mine, has 2 of his 3 lenders tell him they will be cancelling their lending to his company in the start of fiscal 24. His delinquency rate has gone from 2% to 7% in the last year alone, consistently rising since 2021. When you think about this, guys, think about it in this context, because first they will stop paying the credit card, the auto loan, and then goes the house. Obviously, they're not going to start paying the house first. That will be the last thing. And you're already seeing delinquencies increase across the board for credit cards, for auto loans, and you're seeing them increase their provisions, as we're going to get onto right now. Canadian banks prepare for shaky economy, more bad loans, whilst increasing their bonuses. Oh my God, just it's so broken. It really is when you think about it. Canadian banks had a mixed fourth quarter, but a common theme underlining all the reports was the rise in bad loan provisions, signaling that lenders were strapping in for a shaky economy. While some delivered early Christmas presents to investors with better than expected profits, a forecast for more savings and improved cost-cutting measures, the overall bad loan provisions spiked to nearly $4 billion for the quarter, the highest since the pandemic era. So that kind of shows you where we're heading and what the bank's outlook really is. But you have to remember, $4 billion is all in the context of the amount of loans that we have. I mean, we have more mortgage loans, just mortgage loans, than the entire GDP of the country. And once again, guys, I'm talking about mortgage loans here. I'm just talking about mortgages. I'm not talking about credit card debt. I'm not talking about auto loan debt. I'm not talking about government debt. I'm not talking about municipal debt. I'm not talking about private business debt. There is all this other debt. And we are literally in one of the largest bubbles in the world. In fact, Canada and Australia are the only countries in the world, in the entire world, where mortgage debt actually surpasses the entire GDP of the country. Crazy, isn't it, when you really think about it? And shows you because these banks hold on to most of that debt. So how the big banks have grown the rainy day funds. Wow, it looks so amazing, doesn't it? I mean, this chart, look at that line, guys. It's nowhere near the top in 2020 where it was over 10 billion. Wow, when you're talking trillions of dollars in debt. If you just get a spike in the default rate to, let's say, 6% like it got to in 1990, I mean, we've got a yield curve that is inverted as in 1990, then boy, we're going to be in problems. And don't look at the data from the Bankers Association. I'm going to do a video on this week, I believe, so I'll have it out to you to show you how they are lying about the defaults as well. That data is being manipulated. I mean, can we trust anything in this country? Any data points that we are given? Because it just seems that everything is so manipulated. And again, I will show you that later this week, and you will be mind blown by that. So a common factor was also the prospect of the Bank of Canada lowering interest rates next year, which could help consumers with mortgages at the time of renewal and help banks recover from a period of uncertainty. Because we all know that they start lowering rates when the economy is booming. I mean, yeah, it's just ridiculous, isn't it? The prospect of lowering rates, that doesn't mean things are going to be good. That means things must have gone from bad to worse. worse, and they already are. It's just a case you only have to look at the sentiment reports that we have looked at in the past few days to realize how bad and shaky the economic reality really is. The economy is imploding in this country, and it's just a few that don't really understand that. So the banks largely use these to manage expectations. They're focusing on cost savings, so they need to give that backdrop, and it's not an unreasonable backdrop. And I don't think it is, because you've got pretty much everywhere crying out that we're going into this soft landing, no landing narrative. But it's just kind of crazy. And then they have some amazing charts. Reuters put out these charts, which I want to show you. Consumer loans account for a large proportion of the loan book. So it shows you the 6 banks in Canada, the 6 major banks, and you can see their makeup of what their credit is and how it's spread apart. So you've got residential mortgages, which make up a massive amount of CIBC's loan book, as you can see there. You look at RBC, you're talking nearly 50% of their loan book is mortgages. And then the next, you've got credit cards and personal, and then you've got business and government. So BMO has the most in business and government. And then you've got obviously this personal credit cards. And personal is going to fall under the category of also auto loans, things like that. They are heavily reliant on the consumer. The consumer hasn't been in this bad position ever, in my opinion. I mean, it's way worse than in 1990. The yield curve is as inverted as we were back in 1990, but the situation is way worse than then, because people's incomes, their real incomes, were much, much higher then, and their expenses were much lower as a percentage of their income. I mean, we've got rents, mortgages, and all the other costs, property taxes, that now make up more than 50% of most people's incomes in Canada. This is not a good situation at all when you really think about it, because it doesn't leave any kind of leeway for if somebody loses a job, loses income. A lot of people are taking on 2 jobs. People have 2 jobs to make ends meet. This is the reality. I mean, back in the 1970s, women were coming into the workforce not because of equality like they will tell you now. If you actually go back and read the papers and read into the history, it was because of the cost pressures of inflation during the 1970s. That was why women started to enter the workforce. And when you really think about it, now we have people taking on 2 jobs. That is the economic reality, because things have got so bad. But what happens when the economy just doesn't support that anymore? You are going to see things unwind in an absolutely massive way. It's just going to be unbelievable, in my opinion. And I don't think there's any way they're going to be able to dig themselves out of this hole. Impaired loans at Canada's big 6 banks. So this basically shows you the percentage of impaired loans and what they are. So if you look at RBC, for example, most of the impaired loans fall under the wholesale category. And then if you look at TD, you've got a lot of personal credit cards, residential mortgages as well. You would expect that residential mortgages would be a lower percentage at this point, because they're going to start defaulting on all these other things first. So these are going to increase first. And that's exactly what we are seeing when you look at the default rates, when you actually look at delinquencies. They're absolutely exploding when you look at things like credit card debt and you look at auto loan debt. Expenses were also higher as the big banks cut nearly 10,000 jobs globally, resulting in one-time severance costs along with other tech investments, and even stock-based compensation increased. So think about that, guys. 10,000 jobs gone at these Canadian banks. Does that mean that the economy is doing well? Does that mean that the banks are doing well? Well, they're increasing their bonuses, so I guess things aren't that bad. So it's kind of crazy what is going on, and then you can see that they actually plot this out on the charts. I gotta say, the chart's pretty good. So you can see these are the expenses costs, and they have risen for most of the banks, but not as substantial as you would really think, considering what they're saying here. I mean, if you look at the expenses that are rising at some of them, they're not even rising. Like National Bank is barely doing anything. It looks like the expenses are flat there. And then we flip over to Canada's financial regulator, who maintains the bank's domestic stability buffer at 3.5%. So considering the backdrop and everything that's going on, the regulator, once again, which is run by the banksters, we know this, guys, we've been over this, and it is run by the banksters. Head of the OSFI is an ex-bankster himself. Don't be under the impression that the regulator is anything less than just a virtue signaling entity like the government, where the banks are pulling the string on that, essentially. So again, they're maintaining the domestic stability buffer. That is despite what we have going on with negative amortization and everything else that is going on. So National Bank, Jones Trading caught in troubled hedge funds meltdown. So this is an interesting one that caught my eye. It doesn't really tell you, though, unfortunately, what sort of trading that they were caught up in that resulted in these huge losses. But I just want to show you this because you had similar things that were happening around 2008 with a lot of hedge funds going under, particularly some hedge funds that were at Bear Stearns. The court-appointed receiver in the Trainer Ridge Capital Inc. case named new potential creditors, indicating that National Bank of Canada and Jones Trading Canada Inc. also have money caught up in the meltdown of the troubled hedge fund. Three brokerage firms have potential losses totaling around 85 million Canadian dollars to 95 million Canadian dollars on trades they did for the hedge fund. Hedge fund executive's sudden death exposes firm in deep trouble. That was another thing which is really strange. Again, these things just don't sound like good things. The list also included Jones Trading Canada Inc. and National Bank of Canada with their potential claim amounts against the assets of Trainer Ridge marked as TBD or to be determined. Other creditors also could be identified according to the filings. So we don't know exactly what's going on there. We don't know what has caused these hedge funds to essentially go bankrupt and incur these massive losses. But I just wanted to highlight this because, again, like in 2008 and 2007, you saw a lot of hedge funds that were going under for certain trades. Now, they're not saying what these trades are, but hopefully that comes out eventually. And if any of you guys know, let me know in the comments. I would love to hear what they were caught up in that resulted in these huge losses. So it's incredibly interesting what is going on with the economy, especially this, guys. If you're looking for a car, I would hold off on that because considering what is going on in the auto market, things just do not look good there right now. So anyway, I want to thank you so much for watching. If you're looking for a VPN, go to expressvpn.com/marketmania. You need a VPN to get around Justin Trudeau's censorship laws now in Canada, unfortunately, just like China. If you've enjoyed this video, you might like this video here. You might also like this video here. See you in the next one.